All right, morning everyone. Welcome to another episode of Market Trading. I am your host, Vays, coming to you live as the markets are open and as the Swan spaces started. I just can't time these things right. Man, terrible. Try to keep this to under an hour so I can then go and jump into spaces. Okay, without any further ado, a couple of things I forgot to do yesterday. You guys have no idea how heavy this is. This is the silver. This is Vays silver that I'm going to be selling this weekend. Lucky for me, silver price is crashing, as always. And man, this thing weighs, I don't know, in pounds, probably at least 40 pounds. It's nuts. So it's bars. It's like 10-ounce bars that look like this. And there's like 20 of them in here, something like that. It's like bars like this. I still have a lot of coins. Well, it's not all the same company. These three are the same company, but they're pretty standard. There you go, look like that. A bunch of different bars, and they're actually in these packages. They're sealed. That's why the silver is so shiny, because like you have to cut this open. Like there is no like. Can't just take it in and out of this package. It's kind of like stuck there. No, there's also some 5-ounce bars instead of 10-ounce bars, a little bit lighter, because they're almost all of them are in the package. Because when they're not in the package and they've been sitting around in my house for a decade, they look like this. You can see they're not as like clean. Doesn't but yeah. So this is why it's good to have it in the package. But this is like easily cleaned. Still silver, man, crazy. But yeah, it doesn't look like much, but it's heavy as hell. This is why gold is so much more practical in today's digital age. This is why silver can't scale. Silver was an incredible scaling tool for small transactions back in the day when you're carrying a little bit of silver and paying with silver coins. Also, shout out to Ugly Old Goat. So I got this bag right there. Ugly's bag. All right. Now, you know what? I got lucky with 2 packs yesterday. We're going to open a pack. I'm down to like 6 packs. I really want to get done with it next week so that I know exactly which cards I need for trading and which cards I have. So we're going to go through this super quick. Once again, I don't want to see the last card. I'm going to go through a super quick. Economics card, get that one all the time. Money printer, haven't gotten this one in a while, but I have so many of these. The Swan card, have a lot of those as well. And Geyser card, have a lot of those. Money card, it's a really cool card, shows you the devaluation of the dollar over 100 years. Oh, I haven't had this one in a while, the Bill of Rights. I haven't pulled that card in quite a bit. I pulled this one in the last pack, resources card, hardware wallets, I think. And this is Bitcoin mining card, super cool with the volcano. Coinbits card from resources, and man, no Vays card, no Cypherpunk card, but I did get my favorite blue card, which is the Bull and the Bear playing chess. It is one of my favorite blue cards, but it's one out of 1,000. Yesterday I got 2 reds. Okay, so I'm down to 5 packs in this box. So hopefully I pull something cool in the last 5 packs. All right, enough time wasted. Let's go to the charts. Today, we will begin with the news that broke, and that is, all right, come on, you go to charts or what? There we go. And that is Silvergate Bank. Silvergate Bank has officially filed for a closure. I think they lost like $1 billion. Heard something about BlackRock is going to bail them out. I don't understand why. That news makes absolutely zero sense to me whatsoever. If BlackRock really wants a banking license, they can easily get it. They can also go and buy a functioning bank, not the one that just lost $1 billion. But people keep asking about the cards. I usually have a link in the video description. I don't think it's in this video description because I kind of reuse descriptions from former videos with the same thumbnail. So I think yesterday's video description would have the link, or you can just Google Bitcoin trading cards. It's like basketball cards, but for Bitcoin. I'm one of the cards, which is why I'm really trying to get my own card. And I think they're all sold out anyway, so it's not like you guys can get them. You can get Series 2. Series 2 is going to come out during the Miami conference down in Miami. Yes, they're physical NFTs. Though they're not exactly NFTs because they are fungible. There is the biggest rarity is like 1 out of 100. So and they're identical, right? So okay. So Silvergate Bank hasn't really collapsed according to their stock. According to their stock, they're still a $3 company, and someone might buy them out for $3. Maybe that was the deal. Maybe like BlackRock is going to buy the bank for $3 a share. I don't know, but they have not done well. Their stock has not done well. It is now below their all-time low. And if no one buys them out, the stock will get delisted and the stockholders get nothing. They are the last to get stuff. See, this is where having bonds of the company puts you ahead as a creditor versus the stock of a company. The people that are holding the stock are last in line to get any kind of assets from the company. But unlike, a government company, when a private company goes out of business, they have some, resources. They have some property. They might have purchased some buildings where they had bank branches. I don't know. They have some property that you do get. When government bonds fail, you actually get nothing. There's not even a printer to sell when government bonds fail. But when a company fails, you can at least sell their computers and laptops and printers and property that they have. So there is something to get back. And the bondholders would get that first, other creditors would get that first, and equity holders would get that last. Since I am looking at stocks, we can pull up Bitfarms. Bitfarms has gone and made a new swing low versus the February 13 low. That's good. I would love to see this stock down in the 60-cent range for another pickup, but the halving is coming. I don't really want to be holding a mining company through the halving. So I would want to exit, 3 to 4 months before the halving, and I would want to capitalize on the gain from the mining stock sometime from the summer of this year till the end of the year. So summer to September, like May to September, May to August, May to September is when I really want to capitalize, and hopefully Bitcoin rallies. And while Bitcoin rallies, say 100% or 50%, a mining stock like Bitfarms would rally 200-300% as Bitcoin is rallying 50 to 100%. That is my plan. I will only trade that plan if the charts allow me to put in good entries. Otherwise, I will let it go. Holding a mining company through the halving is a good idea. Maybe. It depends on the chart. I'm going to trust the chart. Because I think that a lot of people are going to be selling mining companies going through the halving because they know that all of a sudden the miner will make less money. And the most important thing for a mining company is how much Bitcoin that miner is holding. Same thing with MicroStrategy. If you're able to hold on to a lot of Bitcoin, as the price of Bitcoin rises,
the valuation of your mining company goes through the roof. You're going to go against the conventional wisdom. Well, maybe. It depends. Like I said, the conventional wisdom is to sell into the halving. So if it's peaking in like October, November, I'm not going to take my chances. I want to get out before it peaks and everyone sells it. And if it's oversold going into the halving, I'm more than happy to buy it after the halving when everyone thinks it's going to go bankrupt. But I want to get out before that happens. Do you mind taking a look at Riot? But there's no difference. There's no difference between Riot and Bitfarms as far as their stock charts is concerned. But Riot is actually not pulling back the way Bitfarms is. Bitfarms is lower than February 13 low. Riot is way above its February 13 low. You can look at it in two ways. Either people know that Bitfarms is more trouble than Riot, and they are staying away from Bitfarms, but they're more comfortable holding Riot, or Bitfarms is completely oversold versus its peers, and is going to catch up further. Personally, because I don't know as many people at Riot, I don't trust Riot the way I trust Bitfarms. So, but that's a personal preference. That's my personal preference. It doesn't mean it's right. And like I said many times, if someone asked me back in October, Tone, which exchange do you trust more, FTX or Binance? I would have said Binance over FTX. I don't trust either of them. But if those are my only two choices, and they said, Tone, you don't have a choice. You gotta keep your crypto either in FTX or Binance, and there's no other option, I would have said FTX. So just because I think one company is better or worse than another, it doesn't mean that I have insider information. Like I said, the real answer is don't keep it in either of them. But if you had to choose one, like say same thing going on here. I could choose wrongly. Canaan is very different. Canaan produces the mining equipment. They don't mine with the equipment. So, whoa, what a beautiful buying opportunity here on an MRI daily, right at the low. Can't make this shit up. So, yeah, maybe next low. Once the price of Bitcoin goes up, everyone's going to want mining equipment. Canaan might not be a bad choice. I like Canaan as well. Canaan was the one mining company that sent me a miner for free. Thank you, Canaan, to play around with. Famous video where I almost electrocuted myself. Wouldn't have been Canaan's fault. Would have been my fault. Okay, let's go to the charts. Work our way backwards here. The stock market is rallying once again right off of the support line. Absolutely incredible. Bitcoin is on an MRI warning. So tomorrow we are going to get an MRI buy. Personally, I don't like to buy on Fridays, but the MRI buy is coming in on a Friday. As I mentioned yesterday, it's unfortunate that it's coming in on a double bottom, which to me signals more of a 1 to 4 candle correction followed by some downside. But I don't want to see the S&P go into more downside. I don't want to see S&P break the support line. However, the S&P is at the mercy of the Federal Reserve. The Federal Reserve has made it seem like they are going to raise interest rates 50 basis points, which I honestly think is insane. The most important thing is, of course, the CPI numbers. The CPI numbers are going to come out early next week, and the CPI numbers will tell the Fed what they're going to do. My view on the Fed is that, yes, the interest rate is probably a little too low, and it should not have been this low to begin with. I still have my interest rate chart open. And what I can say is over here, after the dot-com crash, the interest rate probably should have never gotten below 2%. It should have just gone to 2%, maybe lower than the mid-90s lows. It should have stayed at 2%, and it should have started rising earlier. That would have allowed the Fed to lower the interest rate in order to support the economy during the housing boom. Not to mention it would have slowed down the housing boom if the rate had started rising earlier and would have gone, higher up to say instead of 5.5, up to say 6. Actually, it got to 5.25. Would have been 6 or 6.25. It would have deflated the bubble sooner in the housing, and the bubble would not have been that bad because it would have crashed earlier. So if something crashes earlier, the crash would not be as bad. And then on the back end of it, they should have never lowered rates to 0. And maybe they could have lowered it to say 1.5%, a little bit lower than they did than the 2% I would have suggested here. And now we're at 1.5% instead of 0. We keep the 1.5%, and then you start raising the interest rate around 2013, 2014, way earlier and from a higher level, which again means with the interest rate would have been higher than 2.5 going into COVID. And then during COVID, because of the government lockdown, once again, it should have never gone back to 0. Maybe it would have gone back to say 2 or 3. And then again, it should have started rising a little bit earlier and not as fast as this. Not to mention the inflation could have been avoided by not shutting down the economy. So we wouldn't be in this giant mess. So this was a long-winded way of me saying, yes, I think the inflation rate is still a little bit on the low side, but at the same time, I think it's irresponsible to raise it this quickly. The Fed could have been raising the interest rate a lot slower. The interest rate could have been higher, and that's because of all the mistakes that were made starting in the year 2000 by raising the rate too low, keeping it that low for too long, raising it too slowly then after for the housing boom, again, lowering it too low, keeping it low on reasonably long time, raising it too late. So they've always been behind the ball. And now they're finally grew a pair of cojones and doing whatever they like, but they're raising it for the wrong reasons. They're raising it for the reason to fight inflation, which the Fed can't actually do. I know everyone thinks they can do, and the government mandates them to do it, and the Federal Reserve thinks they can do it, but in reality, the Federal Reserve does not control inflation. Inflation is controlled just like by monetary policy of our Congress. They're the ones that cause the inflation, and they're the ones that can stop the inflation by doing proper policy. I mean, this is more luck than anything that the interest rate went all the way to 18 to stop inflation. It didn't. It was all policy. So that's basically it. But you can't possibly expect good policy from politicians because they're lawyers. They're not economists. They're lawyers, and in some cases, you get a doctor like, Ron Paul and his son Rand Paul. So you get a couple of properly educated people, a couple of people that have ran a business in their life, a couple of business people, and the rest are lawyers who know nothing about the economy or money or anything else for that matter. I think like 80% of all the politicians are lawyers. Well, I'm more qualified than 90% of people working for the government. At least I've been in finance and economics for over 20 years. People at the Fed have been there longer than me, but I think they've been taught completely wrong economic models. But again, they're trying to find something they can't control. Fed can't control inflation. No more than Fed can control employment. Like, these mandates of the Fed are insane. And these mandates were put on the Fed by the lawyers in politics. And they have these mandates that, like, it's bullshit. Like, they can't, like, the Fed does not have the ability to create full employment. Only policy can do that. Less taxes, less regulation. That's what creates more employment. You know, embracing the rich guy who's willing to risk it on a business and hire people versus demonizing him. That's what creates employment, not interest rates. It's the Fed policies are like completely nonsense. Can higher interest rates lead to higher inflation? They can. They can. They're insignificant. It's not that the higher interest rate is leading to higher inflation. It's that policy can lead to higher inflation regardless of what the interest rate is. Okay, back to the charts. S&P weekly. It's hanging in there, same support trend line. We're still holding this trend line. I'm still bullish. I would love to see the stock market go higher, while at the same time, I would love to see Bitcoin go lower down to 20. This is a very rare situation. It is also super unlikely that the stock market rallies to the upside, but Bitcoin drops to 20K. Maybe if Silvergate Bank has some contagion. The reason for that is all TA. Based on TA, I would love to see Bitcoin at 20K support. That's where TA is pushing the Bitcoin price right now. That's where I see it heading. But at the same time, the stock market has major support, but I don't want to see the stock market break its support, while I want to see Bitcoin pull into its support. So hopefully the stock market rallies from here while Bitcoin corrects. That would give me enormous confidence to buy Bitcoin at 20,000 if it decouples from the stock market over the rest of this month and pulls into 20,000 by the end of this month, while the stock market continues to slowly rise into the end of this month. I would see that as one of the best buying opportunities for Bitcoin in the last year, actually. I would see 20K as the best buying opportunity over the past 12 months and potentially over the next, 2 to 3 years. That would be it. So the allocation chart is right at support, double bottom. I'm going to wait and see. Once again, 20K is going to be my perfect buy zone, especially if the stock market is not crashing. Hey guys, before I go on, the financial summit, where we discuss this stuff with people way smarter than I am, is going to take place in the UAE, November 5 to 10. Come get your ticket and join us there. It includes an incredible hotel room with your own private pool, food, drinks, everything, except flight. All you got to do is show up. The resort is $1,000 a night. It's completely sold out because I took half the resort and the other half is probably sold out by now. It's a very hot, not literally hot. It is hot in Dubai, but not in November. So it's their summer season. It's their winter season where it's super cool. So November, December are the best months to be in Dubai. It's not crazy hot. It's like maybe 30 degrees Celsius and not 40 to 50 like it is in the middle of the summer. And if going to Dubai is a little far, come join us at at Unconfiscatable in Las Vegas a month later in December. Hey guys, I'm gonna have a special guest on my YouTube channel soon. I don't really have many guests, but I've been chatting with Tom Luongo. I know a lot of people have asked for him to come on the show. I've had a few interactions with him on Twitter. Shout out to Green Candle and his Tuesday night economic spaces. And he does a great job. Big macro guy. It would be great to have him on the show, and we're going to discuss a lot of stuff in finance. So go ahead and give him a follow. And thank him for his plans to come on the show next week. Yeah, this is going to be a great guest. Daily chart. We are sitting right at support. Well, I already looked at the daily chart when I correlated to the stock market. We're right at support, but it's a double bottom. And this is like the last place that I want Bitcoin to rebound from a TA perspective. So I will let it prove it to me. I will not be buying at this price, even though the S&P is rebounding, even though the MRI buy is coming. I could regret that decision, similar to how I regretted this decision. Though I didn't really regret it. I did not buy the MRI buy for two reasons. One reason was the MRI buy came in consolidation. That is not happening here. This MRI buy is not coming in consolidation. This MRI buy is coming off a drop. So this would, if this MRI buy looked more like this MRI buy, which is coming tomorrow. But if it comes tomorrow and it comes off a doji candle, that's a beautiful TA buying opportunity. So had this MRI buy looked like this one, I would have been more eager to buy it. Unfortunately, even though the candlestick structure and chart patterns are way better for this MRI buy, the fact that it's a double bottom is now preventing me from being over bullish on buying this dip. And we are now below the moving average, the 50 period. This would have been absolutely perfect had the candle dropped down to that $21,000 level, but it never did. Dropped down to 21.5 for like an hour, and that wasn't enough for me. Unfortunately, now I have two negatives, and those negatives are there were two negatives here as well. It was we didn't make it to the average, and we were consolidating. And also, because we didn't make it to the average, I felt uncomfortable buying because right before that, we didn't make it to the weekly resistance either. So I knew that my upside would be limited because of this ridiculous resistance at 25 to 25.5. Or just straight up 25. So I knew this resistance was overhead. I knew that my upside was very limited, and I did not buy the samurai buy because a week-long trade is not interesting to me. It used to be when I was a full-time trader, but not now. So Now we're in a situation where we're below the moving average, which is going to act as resistance. We are at a double bottom, even though the MRI structure looks significantly better. So we wait. Unless all the ducks are lining up, we wait. I don't think short-term chart will be interesting. And it's not. We did have the higher probability that we were going to go down versus up because of this structure. But I have no idea if this is the low. I would rather see it go to 20. GBTC is recovering. We do need to do a full episode on GBTC. I need to review how we got here into this bearish position and then explain what just happened and what can happen later. Though I would also like to have some lawyers on the show. So maybe the law show will come back someday. We'll see. Oil. Oh, the data might have come out. Today is Thursday. Uh-oh. Uh-oh. What's going on? Are they censoring the data? Wouldn't be surprising from this government. This was the page. I didn't mess with it. All I do is hit refresh. Hitting the back button. Refresh this page 100 times. You've seen me do it. Where's the data? Where's the data on the strategic oil reserve? Are they hiding it? What's going on? They could have just reworked the page. Let me not accuse the... I mean, the Democrats would never, ever lie about data. Not the Republicans are that much better. What's going on? Do I dare Google this on... what are we looking for? Strategic reserve oil data. Like, I'm not even sure what to Google here. That brought me back to that page. Well, their website redesign is not showing me the data. If someone can find the data that I'm looking for, you've seen it on my show every single day. It's this page. They redesigned it, but they took the chart away. Usually when someone redesigns a page, they do it in test mode, and then they release it to the public. Well, it's really important data, super important, and the government seems to have misplaced it. Because I want to know if they're actually selling the strategic oil reserve, and today the numbers were supposed to come out. EPA natural gas inventory. But I need the oil version. Not EPA, sorry, EIA. EPA. It's not water. If anyone can find that website, let me know. Tag me in the tweet or something. Right, the oil inventories came out yesterday, so the data was gonna update today. Yeah, I mean, as far as I'm concerned, they hit it. Like nothing is showing up. I want to know how much oil is in the strategic oil reserve and how much they're, refilling it or siphoning it. Probably siphoning. Yeah, there's rumors that government is going to sell the government has $1 billion worth of Bitcoin from Silk Road, and the smart thing to do would be just to sell it OTC, not to move the price. But hey, we're dealing with a different administration. If they hate Bitcoin, they're just going to sell it on the open market and try to crash the price. I wouldn't put anything past them. Which is great. That means we get to buy cheap Bitcoin, and the government doesn't have any Bitcoin if they're going to sell it. How did the government get Bitcoin? They stole it from Silk Road users. Let me see that silver chart. Silver's rallying a bit. I'd love to see silver rally into tomorrow. No, I already made the deal to get rid of the silver. I'm not going to hold on to it to April. No, don't worry. I still have more silver than I'm getting rid of. I'm getting rid of 200 ounces. I have more. I was a gold bug back in the day. The old and stupid days of me constantly buying silver and some gold, but mostly silver. It was before I learned what a dumb thing that was. Yeah, so I was buying silver back in like 2012, 13, 14. I was buying silver all through here. All through this downturn, I was buying silver. So after 10 years, I'm break even at best. I started buying it back here, back when it was like close to 30 bucks. But I wasn't buying it because of TA. I was buying it because, anyway, bad decisions. I'm way smarter now 10 years later. And then over here, when it started, and then after being in like, the Bitcoin space for a little while, and then like around 2016, like here, I realized what a dumb idea, what a dumb decision that was to buy silver. The gold that I bought made a lot more sense. It was the silver. It was specifically silver was the bad decision. The gold that I bought, it's way in profit, but not the silver. See, the gold that was purchased. The gold that was purchased in this downturn is way higher, but the silver is barely break even. And that's because buying silver makes no sense. And that's why I'm getting rid of it. But I'm still hoping and praying that I can sell it at a higher price. But I just got tired of waiting, and holding on to all that weight is insane. No, because I bought into the bullshit that silver is better than gold in as money, and that was completely wrong. Completely wrong. There is a borderline argument to be made that gold is money. And the more I learned about Bitcoin, the less enthusiastic I was about gold being money. But even at the time, even before Bitcoin, even going back to, let's say, the 90s, the smart play was to realize that silver is not money and it will never be money again. And there's no reason to buy silver. but gold made sense. And gold still partially makes sense. Very partially. But silver has not made sense since, I don't know, the 70s. It's gold. Where was I buying silver? Oh, at a store down the street. I'm not really going to get into a long-winded discussion as to why silver makes no sense to be money. You can go and read Seyfedin's book. It briefly mentions it. A lot of silver is used in electric vehicles. Yes, but that's not money. Yes, that's correct. I'm not saying silver is not a useful industrial metal. I'm saying silver is a useful monetary metal. Silver is very useful in industry, silver has been losing monetary premium. So gold, silver, copper, these metals, copper used to be money as well. These metals have a, what do you call it? These metals have an industrial value and they have a monetary value. Like on top of their industrial use case, they have a premium that they are also speculative in terms of financially backing an economy as money. Now, for copper, it's very, very small or zero. For silver, it's not zero, but it's small and it's diminishing. For gold, it is also small, but larger than silver. And it is also slowly diminishing, but not diminishing as slow as silver. And there are multiple reasons for this. So if you are going to buy silver because you think that it's going to go up in price because it's a rare metal and the industry really needs it, you are contributing to raising the price of silver. And the more expensive the silver, one of two things will happen. Either the industry will find an alternative and not use silver in the industry, hence the price of silver will drop because the industry will stop buying it, industrial usage will drop. Or if industrial usage of silver that is rising in price, if silver cannot be removed from industrial usage, then the industry would have to buy very expensive silver. So what do you think happens to your electric vehicle? Your electric vehicle goes up in price because of the extra cost that they had to pay for the silver. So while you think you are smart and you are speculating on silver that is making you money, you are in a way contributing to all of the things that you might be buying that have silver in them, paying more for those products. So that's a net. That's a net zero effect. Now, not everyone is buying silver, so it's a not net effect for everyone. For those that have no silver that's going up in price, they don't have this, right? They're only going to benefit. But for those that have a lot of silver, they might benefit from it, but also if silver price goes up a lot, they're going to mine more silver. Gold is very different. Gold's very different. Yeah, I was sucked in by a lot of silver bullshit. And gold bullshit. But I just regret buying the silver a lot more because it made less sense to buy. I regret buying the gold less than I regret buying the silver. But I also regret buying the gold. Should have bought Bitcoin back in 2012 instead of gold. But I didn't really know about Bitcoin that much in 2012. So I couldn't have done that. Right, the stock market is rising nicely. Bitcoin is just holding. We'll go to the S&P. S&P's been rising. We can look at a 5-minute chart. Oh, that's Bitcoin. Can look at a 5-minute chart. See what happened at 10 a.m. Well, looky there. 10 a.m. We opened here at 9:30. We made the high at 9:50. We then consolidated, and at 9:10 we started dropping. So not the most perfect reversal. It's not great. But if I was to make a trade, I would have been profitable. If I was to make a trade, I would have shorted S&P around, 10:05. You can go to a 1-minute chart, but I would be trading with a 5-minute chart. And I would not have exited here at the low because I would have expected it to keep going lower. This green candle would have made me concerned. And then the moment the second green candle came, I would have been stopped out of the trade. So if I had taken on the 10 a.m. reversal trade, I would have probably made about 6.5 points. And 6.5 points on, and I would trade minimum 2 S&P contracts, S&P minis. So on 2.5 points, that would be $650. So that would have been my trade from here. If I would have taken it. If I would have taken it, it would have been this. I guarantee you I would not have taken the trade at the top, and I guarantee you I would not have taken the profit at the low. I would have gotten it around here to short, and I would have been stopped out on either this candle as it's ending or this candle as it's starting to rise and breaking prior candle, in which case the profit would have been about 600. That's on 2 contracts. I used to trade 4. So if you trade 4, that's 1,200. All right, I have nothing else. Please watch. Oh yeah, let's take a look at the halving. Oh, it looks like there was a difficulty adjustment. And now we're at 11 minutes between blocks, which stretches the halving all the way to June. But I think in a couple of days, you're going to see this back in like that 8-9 minute range, which would take the halving once again down to late March. Wow. Yeah, so I did a lot of stuff yesterday on the budget. I'm not going to go back into that. I haven't done any more work since then. I actually got to spend the next week doing my taxes. So this will have to wait. I don't know what I'm going to do with all these tabs. But I really do need to close them, so I need to save all this stuff. I will say that as I was talking yesterday, I forgot to mention one thing. When I was explaining this process where government agencies are borrowing money from the Treasury and they are paying back that money with interest to the Treasury, while others are holding government securities and being paid interest by the Treasury. That's these 2 parts of the budget. This is offsetting receipts. where the Treasury made $67 billion in 2020, 64 billion in, let's say, 2022. So of the 64 billion, a large chunk of this was interest earned from departments that are paying back the money that they borrowed. So and then this right here, interest paid. This is the interest that the Treasury is paying to those departments that are holding government debt, or in other cases, for other reasons. So you see that in 2022, the Treasury paid these departments 13 billion in interest, but they collected probably around 50 billion. I'm actually curious, but we can go and look that up. That's not hard. That would be not here. That would be over here. That's the 2020. This is the 2022. And this should be in interest receipts right here, financing account. So the government made $45.5 billion in collected interest from the money that, this is the part I forgot to mention, from the money that they let departments borrow. Now, the big question that I forgot to answer was, how in the world are these departments making so much money that they're able to pay back that kind of interest? And the answer to that is, it's basically one department. So there's one department that is actually making money because it lends the money to private sector. And that is the education department. The majority of this money, where is it? The majority of this $45 billion that the government made in interest from the money that departments borrow from a treasury is student loans. So the government lends out money to students, they put them in debt, but then these students do get jobs in the private sector and they have to pay back those loans. So the main profit sector of the government, you have to realize the government doesn't make money. The only way the government can actually make money is from, say, weapon sales. They can do that. They can tax the oil, let's say the oil that they sell, or let's say they sell oil for a profit to foreign governments. But the best way the government makes money is by creating money out of thin air, loaning it to students, and then having those students pay back that money with interest. Because that's the private sector. Private sector can actually make money. So those doctors, those lawyers, that education that costs a lot of money, like the liberal arts person will probably default on the loan, but that lawyer, that engineer, that doctor, that person will get a nice job and they will pay back that loan with interest. And that's where the majority of this $45 billion is coming from. That's the part I forgot to mention. All right, guys. On this note, I'm going to get going. I'll save the other packs. I have 5 packs left, which means we're going to finish opening the box next week. I'll open a pack tomorrow, and then we'll have 4 packs left for next week. Oh, there was a question in yesterday's stream I didn't answer. Shit. That question was, how do you envision the default unfolding in everyday Americans? I don't know. Probably a question for next year. Very good question. Do I agree about DAI? I mean, DAI is an algorithmic stablecoin which is going to collapse the way Terra Luna did. I mean, algorithmic stablecoins cannot survive. Yeah, of course it's a centralized shitcoin, but we're going way deeper than that. And DAI is an algorithmic stablecoin. There is nothing really backing it. All right, guys. Thank you all for watching. And I will see you all on the next one. I gotta stop the screen share. Where's the thing? What happened to... Oh God, my Zoom window disappeared. There it is. All right. Bye, guys.